Hello there, my name is Karen Jones. I'm a content editor for the Society of Technical Analysts. Today we're going to go right back to basics and look at trend and trend lines. So what is the first thing you do when you look at a chart? The very first thing you do is identify the trend. What would we mean by trend? The trend is simply the direction that the market is moving in. Luckily, there's only three possible ways that a market can move. It can move up, it can move down, and it can move sideways. In front of you is a euro dollar versus US dollar chart. It's a currency cross. And you can see that the market has been moving lower this year. So how do we identify trend? Quite simply, a definition of a down move is a series of lower reaction highs and lower reaction lows. So, for example, this high is lower than this high, which is lower than this high. This low is lower than this low. The opposite is true for an up move. It's a series of higher reaction highs and higher reaction lows. And the definition of a sideways move is when the highs and lows are about the same level. Once we've identified the trend, it's helpful to place on a trend line. Now, in a down move, what you should be doing really is connecting highs. So let's do that now. I've just put on a downtrend onto the euro dollar chart, and for a valid downtrend, really, we should be connecting 3 points. So here we go. 1, 2, 3 points. That tells me it's a valid downtrend. You will see the market's reaction here in the middle of August, and again in the middle of September. The approaches to the trend line failed and the market sell off again. Now, why do we put a trend line on? Because trend lines help enforce discipline. Once a trend line breaks, you have to reevaluate your position. You have to start questioning why you're still holding a short position if your downtrend is broken. And at the very least, it makes you take a look at your position. It helps to enforce that discipline and not remain in a fixed mindset. They also offer good entry points. For example, the rally to this point here would have given you a prime selling opportunity, and again another one here. In fact, you could have argued that the move up to this point here, you could have tried a short at this point as well. They also offer, so they help you with the timing and they help you with your entry points, but they also offer a place where you could put your potential stops. So trend lines are pretty useful in the scheme of things and to help with your trading. But the most important thing by far is they help to enforce a bit of discipline. Thanks.